Hey guys, welcome back to the channel. My name's Evan and this is Sense or Sense. And today I got a headline when I woke up talking about how Robinhood is buying TradePMR, a registered investment advisory firm, for $300 million. They have $40 billion under assets under management, and they're trying to enter the wealth management industry, which I think is a huge mistake. And I'm going to tell you why in this video. We're going to talk a little bit about my background, then I'm going to talk about the deal a little bit, and then I'm going to tell you towards the end why I think this is a huge mistake for Robinhood. So I was a registered investment advisor for 17 plus years and just recently got out of the industry. You can see that in some of my other videos that I have on my channel. But I can tell you, after being a registered investment advisor for 17 years and seeing all the acquisitions as well as a lot of the companies that have come and gone in the industry, Robinhood is not a good fit for this business. It is just, they are trying to do too many things all in one singular year. Take it from me, I was a single member registered investment advisory firm, and a part of the reason why I decided to shut my business down was because there was just too much regulation, too much red tape. There was not as much money to be made in the industry any longer. And ultimately, it just didn't really make sense to keep it open any longer. So I don't understand why Robinhood is deciding to stray from their core audience, which their core audience is traders and short-term investors and speculators and crypto. And they've recently launched a new online platform for trading on a computer versus on your phone that is supposedly for active traders. They've also upped their game with a lot of new crypto in the last several months. They're obviously big into the game with regards to options and stocks being able to be traded for free and being able to get Robinhood Gold and then get access to a lot of extras. And by adding wealth management, I think they're straying from their core constituency. I think they're trying to take advantage of the younger audience that they have in their business and pushing them into wealth management, which, believe me, is not a good idea. If they do that, they're going to have a lot of people leave their platform if they go heavily into marketing it and trying to force people into it. And because ultimately what they're trying to do is they're trying to make their investors and the people that are in their business more sticky. If you get people involved with having an asset manager or a registered investment advisor, they tend to be more sticky and they stay for longer periods of time. However, as I've said in previous videos, I just think that ultimately paying an advisor to manage your assets for, say, 3/4 to 1.5%, something like that, doesn't have to happen these days. This is another reason why I got out of the industry. I didn't think that my industry was going to survive much longer with regards to helping people with all the knowledge that's out there on the internet and the capabilities of doing it on your own. Basically, I was acting as a hand holder. I was there to help someone understand that they needed to do it, give them an overall plan, and then they could do it pretty much on their own if they wanted to. There's enough knowledge and information and products out there now. 20 years ago, very little of that was available to the public. You had to go to someone like a registered investment advisor to gain access to certain mutual funds or certain annuities or certain life insurance policies. All of that is available online. So Robinhood's paying $300 million for something that doesn't fit with their core audience. Their core audience is into, like I said, speculation, credit cards, trading crypto, trading options daily, trading stocks daily. This does not go hand in hand with registered investment advisory services. And I think by doing this, they're going to put themselves in a position where they spend $300 million and they're going to, like Robinhood likes to, hard sell you on getting into a new stage of their investing with their longer term registered investment advisors. And so TradePMR is going to function as a part of Robinhood that is their wealth management, and they're going to try to be hard pushing you into talking to one of their captive registered investment advisors to try to manage your long-term assets. And I find it very interesting over the last say, year or so, Robinhood has been pushing by giving lots of cash bonuses to people to bring over their Roth IRA, their IRAs, their, all of their retirement accounts from elsewhere, as well as their own accounts. They've been giving cash bonuses over, the last year for people to move money over to them. And I think a part of the reason why they were doing that is ultimately to hard press them with hardcore marketing and convince you to try to put your money with one of their captive registered investment advisors. I just don't think this is the right move. I think they're going to regret it. I don't think that it's going to be good for you as a Robinhood investor or Robinhood account holder to have constant, marketing, constantly being pushed into talking to a registered investment advisor. This is not what Robinhood is known for. So I would be very leery about this merger. I think they'll come to regret it in the future. I appreciate you guys tuning in today. My name is Evan. This is Sense or Sense, and I'll bring you an update on this at some point in the future. Hit that like button and subscribe to the channel. Hit the notification bell. I would appreciate it. I'm almost to 100 subscribers. Thank you guys all for your support.